Bismillahirrahmanirrahim. Assalamu alaikum. In today's video, we are going to discuss the contra account definition and the contra revenue account, contra expense account, and contra asset account. We will not discuss only the definitions, we will discuss with the authentic examples, many examples, not only one example for each of these. So stick with us. Let's start with the definition of contra account. What is contra account? A contra account is a general ledger account with the balance that is opposite of the normal balance for that account classification. The use of a contra account allows a company to report the original amount and also report a reduction so that the net amount will also be reported. So contra accounts rules of thumb are here. Normally our assets accounts are debit. As you know, the accounting rule of thumb is our asset account is always debit. In contra account, contra asset account is always credit. You need to remember these rules of thumb. A contra account of asset is always credit. Now, normally the liability account is credit, and when we are going to make a contra liability account, that is debit. Normally an equity account is credit, and when we are going to create a contra equity account, that will be debit. The example is the normal equity account is investment account and the contra equity account is a drawings account. Next, normally expenses are debit. The expense account is always debit, but in contra expense account is always credit. You need to remember all of these. Any account in the accounting, when we are going to make a contra account of that normal account, that will be the opposite of that account. I hope guys you understand the definition of the contra accounts. Let's move ahead to the contra revenue account with two main examples which will be very understandable to you. A contra revenue account is a revenue account that is expected to have a debit balance. As I earlier said, that if a normal balance is debit, so the contra account will be credit. If a normal balance the revenue account is always credit. So in contra account the balance will be debit. Okay. A contra revenue account allows a company to see the original amount sold and to also see the items that reduces the sales to the amount of net sales. Let me elaborate this more with an example. The example number one we are going to discuss is sales returns and allowances. For example, company K sells $100,000 of merchandise on credit to a customer. It will debit account receivable for 100,000 and credit the sales account for 100,000. This is the first entry we are making when we are selling goods. So if a customer returns some damaged goods out of $500, company K will debit sales return and allowance account for $500 and will credit the account receivable for $500. As you can see here, here is the contra account is sales return and allowance account, which has now the debit balance of $500 and our sales account has a credit balance of 100,000. At the end of the year, when we are making the reporting, the company's K's income statement will report the gross sales of 100,000 minus the sales returns and allowances of $500 and the resulting net sales of $99,500. The company's management will see the original amount of sales and the sales return amount. Both amounts will be visible on the reporting. So how much sales they made and how much damaged goods returned by the company. So this is the main purpose of creating a contrary or the contra account. So the management will understand how much the money we get from the sales and how much money we lose. So this sales return and allowance account is a contra account of sales account. The next example number 2, sales discounts. If a company offers an early payment discount such as 1% or 2% of the invoice amount, if it is paid within 10 days instead of the required 30 days, so the net amount of the discount is recorded in the contra revenue account, which is sales discount. Sales discount is also a contra account of a revenue account. Again, the company's management will see the original amount of the sales and the sales discount value and the resulting net sales, like sales minus sales discounts and the net value of the revenue. So sales discounts value will be shown on the reports, so the management will know that how much discount we have paid to our customers. Let's move ahead to the contra expense account. A contra expense account is a general ledger expense account that is expected to have a credit balance instead of the usual debit balance. You know, expenses are always debit, so when we are going to create a contra account, that will be credit balance. In other words, the account's credit balance is contrary to or opposite of the usual debit balance for an expense. Another description of a contra expense account is an account that reduces the amounts reported in one or more of the general ledger expense account. Let's move ahead to the example. Employee health insurance expense. Suppose company M might debit its expense account of an employee health insurance, and when recording the insurance company invoice of $100,000, if company M required its employees to reimburse it for $2,000, company M could credit its contra expense account with $2,000. So a contra health insurance expense account is a contra account of employees health insurance expense. The benefit of using the contra expense account is that the company's managers can easily see in contra of employees account the amount that the employees paid, and the income statement could simply report the net amount of the expense, which is $8,000, because we have reimbursed $2,000 from our employee. So the company's expense only made for $8,000, so managers can easily see that how much the total expense was and how much we reimburse. Let's move ahead to the contra asset account with many examples. A contra asset account is an asset account where the account balance is a credit balance. As I told you earlier, that the asset account is normally debit. So when we are creating a contra account, so that is always credit. It is described as contra because having a credit balance in an asset account is contrary to the normal or expected debit balance. Let's move ahead to the example number 1, accumulated depreciation. Accumulated depreciation is a contra account of all assets. Suppose accumulated depreciation will be credited when depreciation expense is recorded. When we are making the depreciation expense, so the accumulated depreciation account is created for the full depreciation amount against our assets. The credit balance in accumulated depreciation means that the cost of the property, plant and equipment will continue to be reported along with the original value of the assets in balance sheet. As you can see here, the management can see in the balance sheet the original value of the assets on which the assets was purchased and the accumulated depreciation, that how much assets we have utilized till now. The next example number 2 is allowance for doubtful accounts or the doubtful debts. The account allowance for doubtful debts is credited when the bad debts expense is debited under the allowance method in profit and loss. For example, you have some money owes to the customer, like you need some money from the customers and you don't know if either they will pay or not. So you are going to create an account which is allowance for doubtful accounts against your receivable accounts. Receivable is an asset. account receivable is an asset account, and you are going to create a contra account, which is allowance for doubtful debts account. So you are keeping that money in that account for making the bad debt expense. So the credit balance in the allowance for doubtful accounts tells how much of the debit balance in accounts receivable is unlikely to be collected. So the contra account is an opposite account of any general ledger in accounting. So please keep in mind, for reporting purpose, it is very important for the management to know the original value of the general ledger account and the contra, the reduction of that ledger account. So both values, they want to know how much loss they have faced and how much income they have generated. So this is what we have for today. So I hope guys you like our today's video. Please subscribe our channel so we will be keep motivated to create more videos for you. Thank you very much and good luck and goodbye.